I'm very excited to talk about a very rare topic here on YouTube, which breaks down the expenses a homeowner can expect to pay once they already buy their property. And we're going to break it down by property. We're not going to talk about the regular things that people pay anyway, like electric, heating, etc. We're going to talk about what you expected to pay once you're a homeowner and not necessarily a renter. So I'm going to break it down. If you own a house, if you want a condo or a co-op. In some places in the United States, like in New York metro area, there are a lot of co-ops and there are a lot of co-op owners. So let's start with the house, however. So number one, in addition to your mortgage, people pay for property taxes. So that's probably single biggest item outside of a mortgage payment once you own a home. So property taxes may include things like city taxes or other local taxes, or taxes for their school. There's a school tax in which town their property is located for that particular school. That comes in one category of property taxes. Next category is hazard insurance. So owners of homes are also expected to pay for their insurance in case there is, God forbid, fire or vandalism or even liability. If somebody falls on your property and starts suing you, that's what that insurance is for. So again, when you own a house, that insurance will be required by the bank. And even if it's not required, even if you buy a house with no mortgage, it's a good idea to protect your investment this way. Next is water. And I'm talking about the water payment because not all property owners pay water. But if you own a home, you probably have your meter and you have to pay for water as well. So condo, you also have property taxes. They might be less or more, but condo owners are expected to pay property taxes as well. However, not all condo owners pay for insurance. There is something called Homeowners Association fees, or sometimes it's called common charges. So that common charge includes insurance that basically protects the outside of the apartment that the person owns, or outside of the unit that you own. It also protects, it has some liability component in it. It covers common areas, grounds around the property. You might want to buy insurance for the inside of your unit, let's say your property, or additional liability insurance if someone visits you. In many cases is not required, and it's a lot cheaper than the insurance would have cost otherwise. That's a major difference. So it's not anymore the hazard insurance that I described earlier. It is a condo policy. It's called, just for those who are curious and want to research more on this, it's called HO6. So HO, by the way, stands for homeowners. So homeowners 6. So again, let's go back to condo. You have property taxes that you pay. You have homeowners association fees. Insurance is for the most part optional. And the good news is you do not pay for water. So as you already can see, there are some differences. When you had a house, property taxes, here the property taxes, homeowners association, which you didn't have for a single family home, and then no water versus water, and etc. Hazard insurance there, no hazard insurance here. Okay, so that's the second property. Let's move to co-op. So on the co-op, there is actually no property taxes. They have something called maintenance fee. That maintenance fee incorporates in itself taxes, insurance, and water. So you don't pay for anything except for maintenance. Naturally, that maintenance could be a little bit higher because of all of this. Now, how do they come up with all of these numbers when, let's say it's maintenance or homeowners association? They usually have board of directors. They meet annually and see what their expenses were, what their revenue was, and they try to rebalance and budget it. If the property is managed well, usually those costs are pretty reasonable from year to year. Now, you may have additional insurance, what's called mortgage insurance, which applies across the board for all three types of properties. If you applied for a mortgage and if your down payment was low. and low, generally less than 20%, then everybody is expected to pay for mortgage insurance. I do want to mention another thing about single family homes. If it is in the managed community, you still own a home, it's yours, it's not a condo. But if it's in the managed community, let's say it's a gated community, if the community decides to take care of the streets, take care of each home, the outside of the home, let's say they cut grass, they maybe provide internet service, many times there is also an homeowners association fees, the ones I mentioned for condo. They might be present here as well. I really hope this was helpful. Please like this video, comment, ask us questions, and subscribe to our channel. Till next time, God bless you.